So clearly the focus is going to be on spending, but the finance minister will need to balance between three objectives. One is the focus on rural spending, two, the focus on infrastructure spending or capital expenditure, and three, also continuing on the path of fiscal consolidation. That's important as the Fed is on a hiking path already. So we expect as some of the subsidies that were required during the COVID cycle to go away, the focus will shift squarely on rural expenditure and capital expenditure as they continue on the path of fiscal consolidation. We are expecting the central government to consolidate the fiscal deficit from 6.8% of GDP in fiscal year 22, which is the current fiscal year, to 6.3% of GDP in the next fiscal year 23.
How are they going to do that if they're going to be spending on capital infrastructure and boosting the rural areas?
Right. So if you look at tax collections this year, it has surprised ahead of budget estimates. So both direct taxes as well as indirect taxes are running ahead of estimates. The economy is getting a tax boost because of this high growth. There is also a whole lot of formalization that is happening in the economy, which is boosting both direct tax in terms of income taxes as well as the goods and services tax. So right now, just in terms of numbers, it's running at 70% of budget estimates in the first 8 months of the fiscal year, which is the highest any time in the last decade. We expect this tax buoyancy to continue into next year as well. Also continuing would be the asset sales. This should give the government enough room to consolidate by about 50 basis points, as well as continue on the spending on rural as well as capital expenditure. Remember also that the subsidy expenditure that was required during the COVID cycle, which is incremental expenditure you had to do on food subsidies, etc., that will fade away as you are coming out of COVID. So they will be able to focus on expenditure as well as consolidate.